Good morning, everybody. It is August 27th, the last week of summer, unofficially. We got Labor Day coming up, and this is Mike Aronovitz. I'm joined by Vince Lancy this morning. How's it going, Vince?
Good morning. How are you?
Larry's actually flying back as we speak. He'll be in the office in a few hours, and so Vince and I are going to take you through the overnight. It's summer markets right now. Equity markets are up across the board to start the week. You know, Asia was higher, Europe is higher, U.S. S&P is up 8, Nasdaq is up 30. Fixed income is very flat. The 10-year is up half a tick, whereas the 30-year is down one tick. I mean, couldn't be more quiet there. The yield right now on the 10-year is 282.5. The 2-year yield is 263.5. So that continues to be a talk as that continues to flatten. In the commodity space, very quiet there as well. Gold is down $1. Crude is down 3 cents. Ags are down about 1%. So there's a little bit of activity there. At 9 a.m., we'll have Joe Vaclavek giving us the update on the ag space. Currency markets in G10, once again, very, very quiet. Euro's up 6 ticks. Dollar yen is down 15 ticks. G10 very, very quiet. Everything plus or minus 0.1%. A little bit more activity in emerging markets as dollar Turkey comes back from last week. They were mostly on vacation. Dollar Turkey's up about 3%. A little bit of activity in dollar MEX. And on dollar MEX, one of the key themes. So it seems like we're starting the week on more of a, continued risk on theme as equity markets are at all-time highs right now in the U.S. S&P, like I said, is up about 8 points. And, it's a UK banking holiday, so quiet from that front. That has a major banking sector not in today, so typically it's less liquid markets. But in that, with no real negative news over the weekend, we had some positive developments on Friday, and over the weekend continued talks on the NAFTA front that U.S. and Mexico will probably have a deal shortly, so that's been market friendly. Positive comments on Friday from China, the PBOC implementing some new measures to stem the decline in the yuan. That said, on Friday the yuan was stronger. Today it's actually a touch weaker. And so, that's the general over where we are right now. Like we said, equity markets up 8 in the U.S. And Nasdaq's up 30. DAX is up 0.5%. Vince, what do you have on the equity side?
Well, I think we definitely want to spend some time discussing something that you noticed right before we went on the air. We want to say that for a couple minutes in, and you noticed that the VIX was stronger. I'm not sure if that is still true, but
yeah,
with
that's
the stock
actually
market,
so. VIX is up about 2.5%. It's trading. It went out on Friday at 11.95 or 11.99, and we're right now 12.30. So that is pretty interesting.
Yeah, that divergence in a put skew market is very important to discuss. There are trades, and there are definitely going to be trades on that, and I want to discuss what usually happens in a divergence like that. But before we get to that, which I think might be the activity for the day, like the thing to watch today is, I'm looking at some charts, and the bottom line here is I think adding to what you said. Last week's activity, especially near the end of the week, was I think people squaring their positions leading up to, number one, end of the month, end of the summer, and number two, the September 5th imposition of tariffs on China, which is a huge problem if it happens for many markets. So the trend had been until like Thursday, Friday, that any markets affected or more affected, let's say, by the tariff imposition would have weaker currencies. And you saw that across the board in countries like Turkey, in China, although it's a member of the G10, its currency is more like an emerging market currency. And you saw that in countries like actually Iran, and Latin America is becoming a pretty much, I want to say shit show. I just said it. There you go. It's becoming a shit show across the board. So anyone who says there's no contagion, but at the same time as we have international markets, is really, lying to themselves. Okay, going through the individual equities. On the equity side, I do want to touch on the currencies because I think they're important, what you said. But the individual equities, let's start with something I think Larry still has a position in. Apple, he's a little short Apple, and I have a signal different than his system that says it's okay to be short below new highs. That signal is lessening in strength in terms of the potential for a sell-off. But given that the stock market is on new highs today and Apple seems to be a tad lower, I got to wonder what people are buying now. What is the last remaining stock, Mike, that people are buying? It's certainly not Tesla,
Well, I'm
right?
just kind of scanning the markets right here, and it's a quiet Monday right now. S&P's up, like I said, 8. Nasdaq's up 30, and Fang. I'm just scrolling across. Every Fang name is green. Banking sector's up. Like you said,
Right.
Tesla's a hot stock. It would be, it's amazing. One gift that Elon Musk is giving us that was news over the weekend that he's not taking anything private. The market would be so quiet if we didn't have Tesla.
Right. It's true. That's true. Right. Thank God there's always some
Something to talk
narcissistic
about.
lunatic out there. Yeah, you're right. I don't, it should be noted that we don't want to make too much, or I don't want to make too much of a market in terms of levels, because again, we are at the end of the quarter. No, I'm sorry, we're at the end of the month. We are coming up on these tariffs, and we have a lot of concern when a market makes new highs and people just start squaring up. Before we get into the rest of the FX market and actually commodities, well, that'll dovetail on the commodities. Tesla last night touched down about 5%. So Elon Musk in a corporate blog post said that he was reconsidering taking Tesla private, for some, esoteric reason. The shareholders didn't like it or something like that. And an executive, I believe, resigned this weekend. I don't have a confirmation on that yet, but I'm pretty sure something else happened to that point. Basically, actually, I'm looking at our own screen right now, and this is from Tom. Tesla's at the money straddle. The 322.5 strike is trading 16. Last week, the at the money straddle, which is a different strike, was trading 21%. So I think what's happening is, as you see the market not, as the news comes out that the market's not, that Tesla's not going to go private or is going to go private, the volatility comes out of the market. Doesn't mean doesn't mean the market's not going to have a big move if Musk is thrown under the bus or voluntary goes under a bus, where things go back to normal. But off of Tesla and back to FX, I have a question to you, Mike. I'm looking at actually a statement and then a question. Last week was a holiday week for Turkey, I believe. And if you notice, if you're looking at a daily chart, you'll see that the market pretty much flatlined. I think most people look at that as part of the function of the week, and I don't. I look at it as more like assistance coming to their aid to stomp the volatility out during that week. And now the market is actually rallying a little bit. By that, I mean getting weaker against the US dollar. But I don't view that as something that's going to be long-lived if there are people in the market, governments coming to their aid, whether it be the IMF, who they would never take it from, or Saudi Arabia. My point is, would you sell rallies if you had to, as an FX person, or would you buy dips? I'm putting you on a spot.
Yeah,
But
well, I have an easy answer for that. I have zero view on dollar turkey. I think Greg would say it's completely headline driven, and you got to wait to see. But the one thing that I think is really important is, it was, I guess, 2 or 3 weeks ago when the Turkish lira was falling out of bed. Everybody was talking about European contagion and what European banks might have exposure, et cetera, et cetera. But here we are at 620. That's still a significant decline month over month, quarter over quarter. And this is the sort of thing that affects, they import oil, they import, all of their imports. This cripples their economy from the import side.
right,
And so, longer, this is another few weeks have passed and we're at 620. Okay, great. We're not at 7, the worst level ever for, dollar turkey. But this is still
right,
from where we were months and months ago. We were just at the beginning of July, we were trading at 4.5. Earlier in the year, we were trading below 4. I mean, this is a 50% decline, 70% decline, 100% decline. When you talk about importing oil and things of that nature, that's significant. And so, let's definitely keep an eye on
right.
that. So last week it was pretty flat. But that said, you could also argue the fact that Turkey didn't rally more. That's also problematic, and more problems to come. We'll definitely keep a close eye on that, because we open this week and dollar turkey is the Turkish lira is weaker by 3%.
Right.
Dollar
Makes
MEX right now on a different side is stronger by 1%. So dollar is the Mexican peso is actually stronger by 1%, and that's on behind probably the positive NAFTA dialogue.
right.
So once again, it kind of what Greg was saying as well. It comes back to the idea that G10 is very quiet right now. Overnight, one other positive, or one other note is that the German IFO data came out, and it was actually stronger across the board. And that hasn't really affected the currency market much. And DAX is trading well, European equities are trading well, but that was one of the only kind of pieces of economic data that was out, and that was supportive. But we're in wait and see mode with a lot of these different markets right here. This is the last week of summer. Some people still on vacation, but it's definitely gearing up to be a very active September through December.
Okay. I see what you're saying, especially the comment about headline risk, right? So the Turkish lira, in fact, it seems like the whole emerging market environment right now is headline risk related, and those headlines are going to be coming in based on any sort of political, central banker, or trade-related headline is going to affect them a lot, which by proxy, I think affects gold as well. If you look at the rally on Friday in gold, the gold market was moving in sympathy with the US dollar Chinese yuan pair. You have, I think, potential for 1229 in gold higher, actually working from the outside in. And I actually want to then touch on oil and then go back to what's going on in the stock market on the VIX side. But in the gold market, basically above 1205, 1208, those are levels of my system. There's another $30 of potential upside. So 1229 is definitely on our radar today. We're talking these futures, not just today, but this week. The problem is that I think a lot of shorts have covered, a lot of the impulsive shorts have covered. And if we go below 1203, you're going to have a negation of that rally, of the impulsive part of that rally. And you could quite possibly hit 1180 for starters. Now, this is stuff I touched on in the weekly report, but in between those areas, for anyone who's looking for active trading, you have to trade around last week's high and take what the market gives. To your point that we're at the end of the summer, at the end of the month, and we have a lot of headline risk, I'm not so sure you want to be taking pennies out of a market that can run you over. And it's not even a comment on gold. It's a comment on everything that's out there. Gold is, actually, these are written in my notes. Gold is susceptible to jump diffusion from news headlines this week. Boom. So there's your comment about the Turkish lira hitting us. The US dollar, Chinese yuan, central bank talks will catch someone by surprise, even if it's only to fade the rally or sell-off. Between now and September 5th, gold and trade-dependent currencies will have whippiness, possibly on lighter volume than normal, but they will have whippiness based on headlines. Oil, I think. Anything you want to add to that before I get to oil quickly?
No, take us through the commodities. I mean, it seems pretty quiet. Ags are down, but oil's been very active recently. It's up 9 cents right now. ARK is trading at 68.81. What are your thoughts there?
Okay, oil is, and I do trade oil, although I leave the commentating to Larry. But if you work from outside to inside, the oil market has done what it has done on a weekly basis. Meaning it has made a nice low on the weekly basis. And although it is connected to trade, it does seem to function as a currency of its own frequently, and it is reacting to its own supply-demand fundamentals. The market could go as high as 72 before I would get nervous if I were short. But if you're looking at an inside to trade around for swing trading, well, I don't really have anything that's hot on that right now. But I will say this, above 69, I'm probably going to get a signal to be long. Below 68.30, I'm definitely going to get a signal to be short. That's an hourly basis. And I may be trading oil today instead of gold because of the headline risk. At least oil is more continuously liquid. So I will be looking to get short below 68.30 and long above 69. That said, if you're a person who plays regression to the mean, those are levels you might want to be selling if we go above and back through or below and back up. And I'll leave the rest of that to the oil experts on the screens itself. I do want to elaborate, or really, because this is very interesting, you brought up, the VIX is higher as the stock market is at or near all-time highs. when people, and you'll see this in the mainstream media a lot, people will frequently use that as a headline as we're going to crash. We could crash because VIX is higher, telling you to be scared or careful. That is a canard. That's a bunch of nonsense. The reality is this: when the VIX rallies in a rallying, lightly traded market, it's a sign of one of two things. One, the longs are getting more comfortable. And by that, I mean they're buying more puts. That's what that means. Or two, you actually have a market that's changed, and this is a little bit more esoteric, from being a put skew market to a call skew market. The stochastic process of volatility, meaning if the market rallies, vol blows out. So does that mean the market sells off, vol will come in? Well, in a call skew market, it would. But we're in a put skew market, and I don't see any big change in the skew, which is actually a better indication of fear and greed than VIX. What I would say is this: when you see the VIX rally in a rallying market, especially at all-time highs or near it, we saw one of these about a year ago, it's a good sign to not be short volatility. And that's because if you're buying puts in a rally because they're more comfortably long the stock market, they will be buying puts faster in a sell-off. So if you're a vol player, buying a 30 delta call or call spread hedged is something that I would look at. If you're playing directionally, looking at the stock market, I would say that you definitely want to be aware that we are near all-time highs. Look for the selling that Larry has alluded to in the past that comes in. And on an hourly basis, I don't see anything that makes me want to be long. But, being short up here might be the very, very hard trade to put on. But I think might be the play. I would be a seller of S&Ps, the ES, I should say specifically, below, and this is a long way off, 28.68. So I'll give you an idea of like how extended we are in volatility terms. I have no interest in selling it on my system, but I feel like selling it because it's on the all-time highs.
Well, I think that's sort of the mentality of a lot of people that have gotten their fingers burned trying to sell this thing short a few times, and here we are literally on the tick, basically, pretty much at all-time highs. And part of that also comes to it's unless we get some news, it's tough to sell at the end of the summer without some news with volatility. You actually make a really good point on that vol, because that is a bit of a head scratcher. Up, people look at it like, wow, up 3%. That must mean somebody knows something. But you're pointing out it could just be people more bullish and actually just buying put protection, which actually just drives up the VIX price.
Yes. Now, to contradict myself, when you have volatility rallying, when a market's making highs or lows, it's important to see what side of the at the money is being bought. So, for example, if they are buying calls and not buying puts, that's a bearish sign. And here's what I'm getting at. That means that speculative money is running low on being able to put on long futures positions. So funds are just dedicating money in calls. So if the buying is call-based, raising the VIX, then you would be inclined to be slightly more bearish, because on a stochastic concept, people are running out of money to put into speculation on the long side. On the bearish side, if people are buying puts, it doesn't mean we're going down. It does mean, however, if we do go down, we'll go down a lot faster than normal implicitly. So for me, the play is just to be long vol. It would help, and I'll take a look at it for later on today to see where this buying is coming from, or if it's just the VIX in general being bought as a hedge for long stocks.
The other thing I wanted to point out that we haven't really touched on, so actually even since being on the call over the last 30 or 45 minutes, the dollar has weakened. The euro's at pretty much the high of the day. It is actually the high of the day at 116.40, getting up to the high of Friday. The high of Friday was just above 116.50. One of the key things that risk has basically taken off on and hasn't really looked back from Friday, we had Jackson Hole and Fed Chair Powell was speaking, and he ultimately didn't scare the market one bit. If anything, maybe slightly dovish. He's mentioned that inflation is not a concern at all, and so equity bulls and also risk bulls basically take that as, the Fed is going to continue to raise rates, but maybe not, looking at 2019, they're not going to do anything to throw off the sort of growth path that we're on. And so from that dollar weakened, S&P moved higher, and basically from about 10:30 a.m. Friday to where we are now, we've seen general risk rally with S&P higher, dollar weaker, energy moved a little higher. So that's kind of continuing right now. Powell seems very comfortable with where everything is, and didn't alarm anybody with his comments. And so I think that's also a general theme late in the summer. We're not going to get any huge surprises from the Fed, which the market always feels more comfortable about not being surprised.
Right. So the headline risk is not from the Fed this week as it was last week. The headline risk this week, I think, is going to be, and that's contrary to what's happening right now. The market's a little bit, like you said, dollar's a little weaker, and gold's actually bounced a little bit off of that. And oil seems to be a little stronger, but not really reacting that much to it. But I do think that the headline, I think that's inside the White House right now, in the inner circle of advisors. I do think that since trade talks have failed and China has come out, and done their capital controls and counter-cyclical statements to support the yuan, I think the China hawks, the people inside the White House that are like, let's be tough on China, if you want to look at it as a neocon sort of thing, are probably speaking in Trump's ear right now. So there's no headlines out there right now that's causing the dollar to do what it is doing. Not that I have seen, but again, this is a headline risk week. I think I'd want to keep my powder dry and maybe fade moves if I see signals that make me interested. I think the move is to be long vol on the equity side, on an out-of-the-money call hedged. Those are not things that I have on yet, and we're not advising you to do that. But they're definitely indicators of the market. Metals, I would want to be a buyer in the 1205, 1208 area, and flat below 1203 with a possible short side. Above 1214 today, gold will be a buy for a 1 to 3 hour trade with a stop out at your entry level if you can get out at that level or close to it. Oil, I'm going to be looking to buy that above 69 even or below 68.30. Consider buying the dip or selling the dip. Natural gas, Brim made a comment on that recently, just to throw it in there. Natural gas has had a nice run. Implied vol, however, has been flatlining. And if you look at the market, probably for good reason, even after the sell-off last week. So, you might see some bids for either futures and or options for winter hedging coming in. I think that's it.
Yeah, no, it's definitely, we'll keep an eye on things. There's always going to be a few comments. Just one other thing I wanted to touch on. S&P at one point on Friday sold off for a few minutes on Trump's tweets about, because you brought up the White House, basically that Secretary of State Pompeo was not going to be going to North Korea. And Trump even highlighted, China's not helping out, and they haven't really progressed, and so that seemed like it could create some weekend headlines, but nothing really followed up from that. But we'll keep an eye, see how that develops. But it's always interesting how Trump publicly kind of even says like China's not helping out with everything going on. So. But
I think the Trump effect is lessening internationally now too.
Yeah, well, I think that's the thing. Every state, every head of state is accustomed to kind of hearing and knowing what the president is, the way he talks and the way he communicates over Twitter, and not necessarily the diplomatic channels that he used to, or that president used to. So
there might be a change in public perception, especially how seriously they take him or do not take him, especially when you see what's happened with Musk and his version of that approach. So I think everyone,
yeah. No. So like we said, that's kind of the morning update. That's the overview of everything. We got a good day planned ahead. Larry will be back later on. We have at 1:30, we actually have Adam Collins talking about the latest COT report and September seasonality. He actually puts on a really, really interesting webinar. So get your questions ready. He's going to be going over the latest COT report and then, looking ahead at September. And so that'll be interesting. That's at 1:30. And, we're going to have a few more comments, updates. Greg Schwaka will be coming on to talk about FX. Might have Tony Greer. I'm not sure if he's back from vacation yet. Either today or tomorrow he'll be on. But he took last week off, so he's going to be coming back from vacation, giving us some updates on what's going on in the markets on the equity side. And he's going to be more regularly coming on to speak about the markets around 10 a.m. And so that's really the schedule for the day. Thanks, Vince, and we'll talk to everybody soon.
Thank you. Have a good day, everyone.
Bye, guys.